Welcome back to the watch list. I'm Nicole Petalides. Well, we've gotten a lot of economic data this week, obviously so important when you look at inflation. We have a lot of moves that have been happening. It's a winning week. Dryden Pence is with us, Chief Investment Officer at Pence Capital Management. Thank you for being here. So we have so much to discuss. We've had a lot of earnings. We've had economic news. When it comes to earnings, what kind of vibe did you get overall? Because it's not just the quarter, it's the guidance. What was your feeling on the earnings we've seen thus far?
Well, so far we've seen about 80% of the companies have beat, but a lot of this is because CFOs for a long time were downplaying everything because they didn't know their cost of capital. They didn't know how high interest rates were going to go. Right. So I think that we're going to continue to see a couple more quarters of significant earnings beats because everybody's kind of downplayed it a little bit. So I think we've had 3 quarters in a row, and I think we'll probably have 2 more where you see like an 80% of the earnings beats out.
And it seems to be probably beneficial to be more conservative and then beat. But if you're too conservative, then your stock could tank.
Exactly.
Right? I mean, I guess it's a fairly fine line. We've had that part. What's your thought on the inflationary environment, the Fed, and then recession?
Well, I think the inflationary environment certainly continues to be good. I think also October was a little weak, but people are forgetting we had a major strike going in October that weakened some of those data. I think people underestimate that. We think that there's not going to be a major recession. We think more people are making more money than ever before. Labor productivity's up. Real wages are up. And so I don't think we see a big recession. We see things slow down. It's like if you're driving your car at 90 and you slow down to 50, you feel like you're standing still, but you're still moving like 10 times faster than you walk.
So if the Fed skips in December, which is what you think,
exactly.
And what about January? They skip that too, probably?
I think we definitely skip in December, and we may skip in January because I think they're going to have to. I think they're going to switch their emphasis to just how long. Right? How long this elongated pause is probably going to be more important. That doesn't mean there won't be a rise. It's going to be data driven. But we think we're very, very close to the end of this if we're not already there.
Well, there's people who think 2, 3, 4 cuts next year, and others who say, no, don't get too excited about that.
We don't agree with the 2 or 3, 4 cuts. We think that maybe you roll out to late in the year and you might get 1.
Right. It's also the presidential election. Will they do that?
You know, I think they try not to be overly political. And so that is the only reason why they say, well, if you're going to do something, you got to do it right away. Otherwise, you look like you're manipulating. Right.
Okay, let's get to some of your names here. I know you have Amazon and Apple, but I'll start with Raytheon, since that's the one we teased. We have obviously geopolitical tensions. We always like to talk about aerospace and defense. Why is this one jumping out at you today?
Well, Raytheon has been kind of sold off because of some of their Pratt & Whitney problems. But the fundamental thing about Raytheon is they are a key piece of the Javelin missile system, which we're spending a lot of money with that in the Ukraine, right? And they're also a key piece of Iron Dome. So you have the 2 major conflicts that are going on, and Raytheon is a key supplier. They've got 2.5 times their 2024 sales as a backlog. So if you have a company that's got 2.5 times of their total estimated sales as a backlog, I think you've got someone who's probably going to be doing good for a while.
I think a lot of people had no idea what the Iron Dome was in Israel and saw video with their own eyes this year for the first time. I mean, it's fascinating when you think about how these military defense pieces, strategies work. It's unbelievable.
It's a fabulous weapon system.
It's unbelievable. Let's move on to some of these tech names. Amazon is a name you're highlighting today. Why?
Well, when you think about, I think Christmas sales are going to be a little lower, but online is going to go up. So you take a look at online going from 8% to moving to 13% growth rates. Amazon dominates that. And if you're online, probably 40% of everything online runs through Amazon. They're going to be hiring a lot of people. We think that they're just going to have the wind at their back. The economy's still strong. People have money. We're going to have a pretty good Christmas, and Amazon's going to be a major benefactor.
Yeah, before I get to Apple, just your thoughts on the consumer, because, I mean, we know that the consumer's been very resilient. and particular about where they spend. But at the same time, all this credit card debt, delinquencies and such. I mean, your thoughts there?
Well, part of the consumer activity is switching to experiences. When we look at air traffic loadings and things like that, we're seeing more people traveling. They're buying less, but they're buying more experiences.
Well, we've seen that over the last year.
Yeah, exactly.
Right.
And so, but the consumer is still fully engaged, and I think that they have jobs, and when people have jobs, they tend to spend money.
Yeah, I mean that's at this point. I mean, and unemployment may go up, right? I mean that's.
Well, there's also a labor force. Unemployment may go up a little bit, but there's a labor force participation factor in this. We're not back to where we were prior to the pandemic. So you have still some dysfunction in labor force participation. People are coming back into the labor force. I think that's going to help move these things forward. And every person that goes in gets a job and they spend money.
Look, I want everybody to have a job. But in the last round, I mean, you saw some of the younger folks, right? The 18 to whatever it was, coming into the labor force. And I was going to say 18 to 24, but I feel like maybe it was a longer span. But, it's nice to see younger folks coming into the labor force. The retirement, you had some of those retirees who thought they were really retired, right? It was the great retirement.
Now
and they came back to work.
Yeah.
The one element is the birth rate is dropping, right? So
that's true.
That's the one element that I always sort of think about, because I always love to watch the labor force participation rate. I guess I'll leave that one alone. How about Apple? Now, this is a name you've always liked, but I'll tell you, this week was Apple week. So many people came on and like Apple.
Well, Apple is transformational in terms of its consumer products, but what we've seen is the services part of Apple has grown. It's doubled, right? It started with no services in 2014 and another. Yeah. And so now the services part of Apple has grown to the point that their revenues equal that of Johnson & Johnson. So just the services part of Apple would be the 45th largest company in the S&P 500.
Yeah.
And it's growing.
Yeah, and so where do you think it's headed? I mean, do you have target prices, or you think it's the kind of thing that you hold on to for a long time?
Rather than having a target price, we tend to think that this is a long-term strategic hold for people for an extended period of time. So it kind of goes into every one of our portfolios.
As you mentioned, Johnson & Johnson, we had that spin-off of Kenvue not that long ago, which brings me to the thoughts of this IPO market. And it seems to have opened back up this year, right? You had ARM, you had Instacart. I mentioned Kenvue, we had Klaviyo, Instacart, et cetera, et cetera. I mean, today we had DDC, a food company, and we had the honor of interviewing the CEO. Would you buy IPOs generally, or no? Is that over your career?
I tend to take a look at new companies kind of after the IPOs come out, and some of the high, I let them settle for a little bit, and then we do that. Like when you go back to Facebook, it had a very kind of hot IPO, and then it settled down, and then that's kind of when we went in. And so I kind of like the hype to settle to see if they're really going to begin to execute, and then that's when we'll take a look at it.
Yeah, because sometimes people ask me, right, should I get in on an IPO? And so I said, let me ask a pro.
Yeah. So
Dryden Pence, thank you. It's good to see you. Pence Capital Management.